From our partners over at Drovers, the latest Sterling Beef Profit Tracker shows cattle slaughter continues in decline as packers scramble to find enough market-ready cattle to keep those chains moving. And that's propping up feeder prices. Last week, feed yards saw profits of $441 per head. That's steady with the previous week on an average 5-area price of $187 per hundred, $44 per hundred higher than the same week a year ago. Packer margins, however, not doing so well, with average losses of roughly $81 per head. That's another $71 worse than the previous week. Feed costs were $580 per head, still higher than last year. Meanwhile, the industry is focusing on the latest mid-year cattle inventory report showing the nation's herd continues to shrink. The total cow inventory numbers were down, as were overall beef cow numbers and replacement heifers. Oklahoma State's Darrell Peel says it's clear there are fewer head available to go into those feedlots, adding that there's no indication that herd liquidation has ended just yet.
Well, that's what we were looking for in this report, the possibility that it shows that, and we just don't see that yet in terms of anything in the inventory report or, the slaughter data at this point. None of that suggests that we've really stopped liquidation. We're clearly getting smaller through the middle of the year, and I think, for the rest of the year, we may be in that transition to stabilizing and maybe even thinking about rebuilding the herd. But if we get that started this year, it's just going to be a limited start, and we will be smaller this year in terms of the overall inventory.
Now, he says it is clear that feedlots are scrambling to shore up feeder supplies, adding that the numbers show steers on feed were still declining. However, heifer inventories were even with a year ago. Peel says that shows that producers are still selling and not yet saving heifers to help rebuild the herd. He expects strong feeder and fed cattle prices to continue.